What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips, but more importantly, how you can use a proven and repeatable strategy to make money every day. This channel happens to focus on the triple leveraged bullish semiconductor ETF, which goes by the ticker symbol SOXL, but this trading and charting method can be used with any publicly traded company. Make sure you hit that subscribe button and the notification bell. That way you're notified whenever we release new videos. We do release videos Monday through Thursday and once on the weekend, but we also release bonus content like our deeper dives into how we set up our charts and our levels for our precision trading and scalping. So make sure you have the notification button hit so you're notified when those videos are released. Looking at today's agenda, we'll recap today's intraday price action for SOXL, then we'll zoom out a bit and look at the week, month, quarter, and the year. Then we'll zoom back in and set our 4-hour markers for tomorrow, as well as the triggers and targets for tomorrow, and we'll review the triggers and targets for the week, the month, the quarter, and the year. So just diving into the chart in today's intraday price action, you can see we have here all of the 4-hour markers, right? We have previous high of day up here at 35.30, overnight high at 34.91, opening print at 33.96, overnight high at 33.93, and previous low day at 33.67. We've got a couple of honorable mention levels here, like the week flip at 33.20. That's what flips the week red if we go below that. We've also got the 4-hour triggers to the upside and to the downside at 34.53 and 34.36. And we've got a couple of fib extensions from the September 17th gap and go that we had. So we've got the hourly broadening formation down here as well, the lower broadening formation, and a 1-hour trend line, downtrend line right here. Again, we don't rely too much on trend lines. We like when they align with horizontal lines, but we do put more weight in the broadening formations. And again, if you're not familiar with our charting method, we dive deeper in the bonus content videos. These videos are more geared for setting our triggers and targets for the week, month, quarter, and year, and then going over the repeatable strategy for the scalping and day trading. So just to zoom in a little bit or make the candles just a little bit bigger, we can see we got the opening print, and we know the rules, right? We're looking for higher lows above opening print, at or above opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts. If we do get into calls, then we're targeting first the overnight high and second the previous high a day. If we get into puts, we're targeting the overnight low, and then we're targeting the previous low a day. That's with where the opening print is today. If opening print was below overnight high, then the first target would have been the overnight low. If opening print was below overnight low, like if we gap down from where the last trade was made pre-market, and where the first trade opens up when the market opens, then our first target to the upside would be overnight low. Then it would be the overnight high, and then it would be the previous high day. But that's just the general rules for the repeatable strategy, right? So just in the most basic form. So we did see on the 5-minute, and today was a little, I don't want to say unusual, but because it was such a sideways day, such a consolidation day, there was money to be made both ways. But even for scalping purposes, the triggers were on the hour, right? So the 5-minute gave you a couple of moves, but they really would have got stopped out for minimal gain or slight loss, right? And there was no lower high underneath this 5-minute mark. Underneath the opening print on the 5-minute, close enough to opening print to get into this move going to the downside. So if we just quickly look at the 1-hour chart, we can see that yesterday we had a lower low on the 1-hour perspective, so that created this broadening formation, right? If we activate this, we can see that the nodes are here and here. So going into today, we knew that we had an hourly broadening formation down here, and then we had an hourly downtrend because we had the high and then the lower high here. So we did open up sideways, right here at 33.96, and we pushed up, but we did make a lower high. So the trigger was here. Once price got below the low of the second hour candle of today, that's where you wanted to enter puts, right? And then once you enter those puts, you want to go ahead and if you're scalping, that is, go into the 1 minute and look at how things are reacting at different levels, right? You see we got slight corrective activity at previous low a day, again on the puts. The trigger or the targets are overnight low and previous low a day in respect to where the opening print is. So, you know, if you bought puts, let's go back to the 1 hour. Oops. Go back to the 1 hour. And if you bought puts, as soon as it triggered, so the low here was 33.84. We go back to the 1 minute and we look at 33.84 is right here, right? So you would have entered right here and then immediately got a higher low, which would have given you confidence to stay in that put, right? And then you continue to ride that down. You get a higher low here, or a lower high here, a lower high here, a soft lower high because it's part of a 3 or an engulfing candle. And then you push down through the week flipping the week red, again getting a soft lower high and bouncing off of basically this 1 hour broadening formation and where it lines up with this fib extension or where the fib extensions would start from the gap and go, right? So once you got that bounce, you see you got the lower high here, but you immediately got the higher low here. So you have your stop set above the lower high. Once price got to that, you would have got stopped out and you would have got a majority of this move, right? So again, showing that you don't need to be the first in and you don't need to be the first out to get a good chunk of the move, right? The waiting on the 1 hour to get in still gave you the same type of entry that if you would actually gave you a slightly better entry than if you would have waited for the 1 minute and got the lower high underneath opening print on the 1 minute. But then again, once you got the higher low here, you could have taken the risk, right? Just not bought as many contracts possibly, or had a tighter stop loss. Adjust your risk to reward ratio, right? Because you're taking a riskier call or a riskier option, taking a call underneath opening print for a scalp, right? But you could have taken this higher low and entered right here once we created went above this lower high and entered calls and just rode that up until basically opening print. So once you enter those into the call, right, the same levels that were levels of inflection on the way down are going to be the same on the way up. So previous low a day, you see how we got corrective activity here. Basically price went sideways at this point. That shows that this again is a point of inflection. Then from that it burst off of there to basically opening print and then ran into last week's high. So you can see that our levels right here came into play very nicely from an intraday perspective. I think that's enough from the scalping perspective. Let's look at the day chart. Bring out a chart that's a little bit more a little bit cleaner here for us. And we can see that right here's our 11 weeks of sideways action ranging between 24 and 28, or 2350 or 2350 and 29, right? And then we had our breakout point. We had an intraday test of that breakout point with this 3, and we bounced from there and we continued to move up. So now we've got this pullback. Now, just like yesterday was a red 2 up, this was a green 2 down, right? So it's not the most bearish signal in the world, but it's not the most bullish. It's leaning more bullish than bearish because number one, it's a green candle, but two, it's a hammer, right? So we got there was price action that went pushed down, but it was not accepted. Price pushed back up, and we closed not only at where we opened, but we closed above where we opened, right? So we can see that this is a possible higher low that we're putting in from the day perspective. We're not going to call it ahead of time. We don't get into predicting. We just react to, or we respond to price action, right? So if we do get another down day tomorrow, we'll be ready. We'll have our triggers and targets ready. We'll get into those here in a minute with our notes. And if we get price action to the upside, we know we've got very clear entries and very clear exits to the upside as well. So, I would lean more bullish on the close of today, but I don't want to just say we're going to have a green day tomorrow or an up day or whatever. Again, I just feel as though today was a little bit more bullish than bearish, right? So we do still have the gap down below. We could go fill that tomorrow or through the end of the week. Thursday and Friday we could push down, but until that happens, we won't get ahead of ourselves. We didn't swing any puts overnight. We don't have any calls that we're selling right now. We're waiting for a more definitive, downtrend to do any puts that are longer than intraday plays, right? So at this particular time, we're still in this uptrend from a day perspective. From the week, we did get a little bit of a change, right? Because again, when we opened up, let's bring up the one with the fibs. Let's go. So we can see that we did open below last week's high. This purple, solid purple line right here is last week's high. So we opened up below it and pushed up to it and above it previous to this week. But then today we pulled back below it. We were lucky to close above it, right? So we are still at least in force with the two up because we're above last week's high, but we're playing on the edge right there. We're threatening, if Thursday and Friday are red days, then we've got a red inverted hammer on our hands, and we're looking at a possible, two up, two down from the week perspective. Now, this wouldn't be the worst thing in the world because we are at a higher high at this in this trend count, right? There's plenty of room to put in a higher low, even if we were to fill both of these gaps, right? We could say we bounce off of last month's 50%, which is this green dash line, which aligns up with last quarter's high. If we retest that breakout point from a week perspective, that's not the end of the world, right? That's turning resistance into support, and it also will be taking two gaps off the board that we won't have to worry about later on if we just go to continue to push up and maybe try and fill this gap or whatever. So again, from the week perspective, leaning bullish, but somewhat neutral, right? Because we're teetering right on the edge of being enforced with the two up, and we can very easily turn red. At the very least, turn this into a doji, right? So from the month perspective, let's go ahead and zoom back out a little bit more. Oops, get the right chart on here. Look at the month. So looking very healthy from the month perspective, right? Very bullish engulfing candle last month, and then very strong price action to the upside, leaving a couple gaps on the way up, right? So we did trigger by going above this candle here. We triggered the 3 combo 2 down, combo 2 up. So we're looking for the high of this candle here, which is 36.15. Again, if you're familiar with this channel, that 36.15 should be ringing bells, should be ingrained in your brain. It's a target on many time frames, starting with the week. So we've got that in play on the month perspective. Looks like we've beaten this monthly downtrend line that we had here and that we were fighting for a couple months. Looks like we beat it, so we're pretty close to taking that off of there. But we'll see what type of price action we get for the rest of the week, rest of the month really, because there's not too much time left in the month. From the quarter, again, we're looking great. We've almost reached the magnitude of the 2 down, 2 up. The magnitude of that is the high of the candle to the left of the 2, which is again that 36.15 level. So from the week to the month to the quarter now, that 36.15 is a level that we're trying to see. And again, that level is exciting from a quarter perspective, because if we do reach that level and breach it, meaning going above 36.15, then we trigger this 1 combo 2 down, 2 up, which doesn't have a magnitude of the high of the 1. It actually has a magnitude of the high of the candle to the left of the 1. So that's this candle here, which is that 70.08. Again, it's not going to happen in 1 quarter. It might not even happen in 2. It may take 3 or 4 quarters to reach that 70.08. But that would be the magnitude. And as long as it is still in force, meaning as long as we're still above this 36.15 level, then we want to stay in our long calls, right? The January 27s, the January 28s that are out now. I don't know why they won't release June 26 contracts for SOXL, but they've got May 26 contracts. But again, those longer term or mid to long term contracts, you can stay confident in those, especially if we stay above that 36.15 level. But even without being at that 36.15 level, just staying in force with this 2 down, 2 up should give us confidence to hold on to those. Again, from the year perspective, we've really turned things around. We did at the beginning, or not at the beginning of the year, but midway through the year, at the earlier part of the year, I'd say close to midway, we triggered the 1, 2 up, 2 down that had a magnitude of 621. We got to 723 with this 2 down, so it didn't reach its magnitude, but it's basically run its course, and we've turned this red 2 down into a failed 2 down. It's a green hammer. If we can finish the year like this, then we're looking to trigger the 2 down, 2 up in 2026, targeting again that 70.08, right? So not only does that trigger the 2 down, 2 up, but it would lock in what would be a higher low, right? This 723 is higher than this 621, so that puts in a higher low from a year perspective and maintains somewhat of an uptrend, right? So that's how things look from the wide view. Let's go ahead and zoom back in and take a look at our 4-hour markers and triggers and targets for the intraday trades. Let's look at the scalps first. Let's bring up our scalping chart. All right, so we have on our chart, we've got this hourly downtrend that we've still got to contend with. We do have a 15-minute an upper 15-minute broadening formation that has formed. Right, we had a high and then a higher high on the 15-minute time frame, but we have not had a lower low on the 15-minute time frame, so there's no broadening formation just yet. Now, you see how we close. This could continue to push down tomorrow morning, and before it bounces maybe off of this 33.91 or even bouncing off of this 33.64 fib extension as well. That would just create a lower broadening formation to this 15-minute broadening, right? But it would still keep intact this 1-hour downtrend. So right now we're looking at the overnight high being, and actually we need to update this because I didn't update the 4-hour levels. Yeah, let me get these 4-hour levels right. Apologies for not doing the homework before, but we'll activate this previous high day, move it to today's high. We'll take the 4-hour trigger to the upside, move it to the high of the second 4-hour candle of today. We will take the 4-hour trigger to the downside and move it to the low of the second 4-hour candle of today. And we will take the previous low day and move it down to today's low. All right. So that gives us a better look. Let's go to the 5-minute, and we're just looking at it just purely from a scalping perspective. Now, almost guaranteed that the overnight high and overnight low will be in different places by the time we open. So, currently we're slightly down, we're slightly red in after hours. So let's just say we do get a push down in after hours, and overnight low coincides with this 138.2 fib extension of the September 17th gap and go, right? Say we, open up right here. Oops. Let's get the right tool out. Say we open up, let's say we get a push up from the overnight low before it opens, and we get an opening print here at 33.79. If we open here and we get price action to the upside and maybe get a little rejection off this 150 fib extension, but then we get a higher low above this opening print level, then we want to be getting into calls, and then we'll be targeting the overnight high and the previous high a day, right? Those are going to be, from a scalping perspective, our targets. And you can see why, exiting at previous high a day or getting rid of most of your position and just leaving a couple runners would be probably advisable, right? We're running into this 1-hour downtrend. We're running into the previous high day. We're running into this 200 fib extension. There's this 15-minute broadening formation that'll be coming into play depending on how quickly we get to that level. So, it'd be pretty advisable if you're not starting to scale out at the overnight high. You scale out a little bit at the previous high day and leave a couple runners for, if we get, some good action to the upside and go really push things to the upside, then you've got your runners. But again, we've got our swing calls that we have that we would continue to just monitor on the way up. But if we get price action here and price action pushes down, and maybe we get a bounce off an overnight low, but we get a lower high underneath opening print, then we want to be entering puts. First target would be overnight low. It doesn't give you a lot of magnitude, so I wouldn't really scale out there. The first scale out position you might want to look at is the week flip. It is an important point of inflection, so this is where price action opened up for the week. So, if you want to maybe scale out of a couple here, that could be good, especially if we're getting some corrective activity and you don't really know which way things are going, and you got to get down to like the 1 minute, and you don't want to just be staring at the chart. You could always set your stop somewhere around there if we've poked through it, or just go ahead and exit them manually yourself, but then continue to write it down to the previous low day. I would scale out a little bit there, but you can see how the hourly broadening formation comes down here, starting to intersect with this other fib extension that we have here. But we've got the gap, this blue This blue area down here, we've got the gap. So depending on how long it takes, we could continue to just come down and start to fill this gap. Now we've got other levels from a daily perspective that we'll look at within the gap, but from a scalping perspective, that's what we've got, right? The overnight high, previous high of day, overnight low, and previous low of day, with some honorable mention levels in here, and just follow the rules. Higher lows above opening print or at opening print. Even if you want to take a little bit more risk, then we're getting calls. Lower highs underneath opening print, and you want to get into puts. All right, so that's how you would look at it from the scalping perspective. Let's look at things from more of a day trade, possibly even overnight swing trade perspective. We can see, looking at the 4 hour, we're still in an uptrend. We have not locked in this higher low yet, right? This one, or this inside candle in the second 4 hour of today, it didn't lock this in as a higher low just yet. So if we get price action to the downside tomorrow, that triggers the 2-1, 2 down, triggering at the low of the second 4 hour candle of today, targeting the low of today, this 2 down. That would flip the week red. So you would have, at that point, you could look at rolling, not rolling, but the targets then rolling into the daily, the day chart and the week chart. Not so much the week chart, but the day chart at least, for your extended targets from a 4 hour perspective. To the upside, you would have a 2-1, 2 up. Now, there's not a lot of magnitude here, right? It triggers here at the high of the 1, and the magnitude is the high of this 2. But what that does give you, what it does trigger if you go above this, is a combo 2 down, combo 2 up, which then gives you a magnitude of the high of this candle, this 35-30 level, right? So if we hit that 35-30 level, and we've got a real good trending day, we've got one of those 10, 15, 20% days that SOXL likes to rip off sometimes, then we start looking at pressuring this daily broadening formation and the market maker's expected move high up here at 36.03. If you're not familiar with the market maker's expected move, make sure you check out our weekend video where we dive in a little bit deeper onto where to get that level and how we put it on the chart. So that's how things look from a 4 hour perspective. From the day perspective, we did again get that 2 down, but it was a failed 2 down. We got a green hammer. So even if that somewhat bullish candle is voided and we get action to the downside, we go below yesterday or today's low, then we're triggering the combo 2 up, combo 2 down, targeting the low of this 2, which is that 32.12, which is also the top of this gap. And then at that point, we're looking at hitting half gap. We talk about that level a lot on this channel. We see reversals once you get halfway into the gap, at least from an intraday perspective. That's where a lot of reversals can occur. So this last week's 50% line, this 31.53, this dashed purple line, that is kind of in line with halfway through this gap. It's a little bit lower than halfway, but so we could see some type of bounce here if the gap doesn't get filled fully. But if it does fill, then we could see a bounce point at the gap fill. That would, if we get into this gap, give us a lower low on the day perspective. But because we're coming from a higher high, it's just making a broadening formation. It's not putting in a downtrend. It's just giving us a lower low after a higher high. And then, it's at some point, whenever we make the next low, then we've got, a broadening formation that would, from the day perspective, right? So don't want to jump ahead of ourselves. We just want to play what we get on the charts. Again, if we do get this pullback, it's not the end of the world. We had this 11-week range right here that we were in, and if we pull back to this breakout point and bounce off of it, that's more of a positive signal than anything. We're turning the resistance that we had here into support, and we're continuing to move higher. So. That's what we've got from the intraday and day perspective. If you want to look at it from just the numbers written out from the 4 hour, again, these notes are for Thursday, September 25th. These notes are from the 24th, not the 23rd. Tomorrow there will be 65 trading days left in 2025, and the close price today was 34.30. We know what it takes to flip the week, the month, the quarter, and the year red by just glancing at our notes here. We know the market maker's expected move was plus or minus $3.01, giving us a range of 36.03 to 36.01. We know where our gaps are above. We know where our gaps are below. And then from the 4 hour perspective, again, if we go to the downside, that's a failed 2 down, green 1, 2 down, triggering at 33.97, magnitude of 32.81 with extended targets of 32.39 and 32.12. If we go trigger to the upside, that's a failed 2 down, green 1, 2 up, triggering at 34.34, a magnitude of 34. Oh, that is not right. I must have fat fingered that. Let's go to the 4 hour real quick. The high here is 34.39. Yep, I fat fingered it. So again, we trigger at 34.34. Very small magnitude here at 34.39, but we've got extended targets of 34.70 and 35.07. From the day perspective, we would have a why is it? I apologize today. I did not do my notes. 2 down. Oh no, I did. I apologize. So combo 2 down, combo 2 up, combo 2 down. From the day perspective, right? Here's 2, 2. That's a combo 2 up, and then a 2 with another 2 down would be the combo 2 down. We're looking at a trigger of 32.81 with a magnitude of 32.12. Extended targets of 31.77, 31.25, and 30.45. To the upside, we would have a 2 down, 2 up, triggering at 34.29. Magnitude of 35.30 with the target of 36.03. Extended target, of 36.03, 36.22, and 36.45. We've already looked at things from the week, month, and quarter perspective and the year perspective on the chart, so I won't bring those back up and make this video any longer. We'll just go over the numbers here. We have triggered the 2 up, 2 up. We are in force because we are above that 34.14 level. We've already taken out this 35.07 target, but we need to get back up. If the bulls want to continue pushing up, they need to get up to 35.95, 36.15, and 38.45, which are extended targets. If somehow we were to pull off a red 3 or a bearish engulfing candle on the week, we would have to reach that 28.92 level. So I mean, it's not a whole long it's not a real long ways away, but I don't see that happening this week. If it does, I would be pretty surprised, right? So from the month perspective, again, we are in force with the green 3, 2 up, triggered at 29.66. We've already reached the targets of 30.55, 34.42, which looking for the 35.95, that magic 36.15, which again is the higher high on the week perspective. We got that marked out here, 36.15. So again, 36.15 on the week and the month. Those are really keying in on that level. And then a final extended target of 41.19. To the downside, again, it would pull a green 3 or a bearish engulfing candle. Be highly surprised if it does that by the end of September. You'd have to get all the way down to 22.57. From the quarter perspective, we are in force with the 2 down, 2 up, triggered at 25.84. Again, we're looking for that 36.15 as the magnitude. If we do reach it, it triggers that 1 combo 2 down, combo 2 up on the quarter. The magnitude of that is 70.08, so we don't have that on the board for a target. We do have it as the higher high, right? But there's a lot to get through before we get there. So we have extended targets of 38.89, 42.04, and 44.54. The year, we triggered the 1, 2 up, 2 down. It did not reach that magnitude, and we have flipped the year back green. It's a green hammer, so we want to keep it that way. Be highly surprised if we make a green 3 on the year. We'd have to get up to 70.08. But at least we know where we stand. We're with that green 3. We're trying to set up that 2 down, 2 up for next year. So there you have it, your triggers and targets for not only your scalping and intraday levels, but the swing and the day trade and swing levels as well, whether it be a short swing, mid, or long-term swing. So I hope everybody enjoyed it. If you did, give it a thumbs up. It really helps the channel. It helps the channel grow. We like to spread the word about SOXL. Again, you can use this trading and charting method for any publicly traded company's ticker symbol. But this channel is just gearing in on SOXL. It has a very low premium for the high delta to low theta ratio that you get, and the underlying ETF is a high beta ETF, so you're going to get that movement more often than not. There's very few days that are like today that you just get sideways action, and even with this overall sideways action, there was a move to the upside and to the downside to be had. So SOXL is a great trader for a lot of beginners, even skilled traders. It's just a steady income instrument in my eyes. Once you use this repeatable pattern, this proven strategy, especially with the scalping and day trades, It's really hard to lose with this if you stick to the rules. So just helps the channel grow if you give us the thumbs up. It also helps spread, if you're not familiar with the strat, it helps people get familiar with it. There's a big strat community out there, but there's still a lot of people that don't know about it. It is the strategy that our trading is based in, but we do have some level nuances in there as well that we like to share with people. So if you enjoyed it, give us the thumbs up. Make sure you're subscribed and have that notification button hit. We'll continue to release these videos Monday through Thursday, and once on the weekend. From time to time, we'll release that bonus content. If you have any questions, let us know in the comments. If you have any suggestions, let us know in the comments. We're really open to everything, any types of ideas that people have. If we can make it happen, or if it can help somebody trade better, then we'd be glad to do it. So I hope everybody gets some good rest tonight. Wake up refreshed tomorrow. Be ready for tomorrow. Whichever way we go, up or down, we're ready. We've got our triggers and targets here set, and we're ready to go. So I'll be out there and look forward to trading with you.